Hey guys, so I just want to do a quick check-in on Chainlink. I've covered this coin about 2 or 3 times in the past, so if you're new here, I'll just give you kind of a brief rundown on the macro price action, and then I'll get into the recent changes on a smaller time frame. Yeah, before I get into this though, I should mention that if you're not subscribed and you want to get updates in the future, you should subscribe now, click the bell, and then click on all because this is a new channel. There's just around 400 subscribers or so, and because of that, when you type something in a search for a specific coin or whatever, very rarely do we come up at the top. So YouTube will prioritize the channels that have a higher subscriber base. So once you click away from this channel, if you're not subscribed, you may not be able to find it again. So the main level, if you're want to trade this asset, start on a weekly time frame and just mark out your levels on the high term time frame first. So this range right here. So I marked it at the top of these candle bodies up to this level here, which is kind of based on where the wicks are. That's between about $4.44 up to $4.80, around there, $4.88. So that's basically, that's a main primary level. If it breaks this, then obviously it's in a lot of trouble. I don't personally think it's going to get back down there and break this level, right? Then the other levels I suggest that you draw on the weekly time frame. Just take a horizontal line here and place one under these candle bodies right here. And as you can see, so that this will mark the support level right here. And as we came up, we tested it multiple times and it served as a resistance. So you see like this wick came up here, got sold off. Again, the wick touched it, got sold off. Again, 3 times, rejected 3 times at this level. And I have that around $9.44. And then the other level I suggest that you draw would be right here. I have it at $12.60. So you see, it was a level of resistance on the upside. Then once we broke it, it served as a level of support for over a month. But when we came back down to it, since we were support here for quite a while, the price bounced off of it right here. And then obviously, since it was resistance here, support, then support again, as the price comes up to here, I anticipate that it's going to give us a little bit of a resistance as well. Okay, so now that you've marked those levels, the next thing I suggest that you draw is this down sloping level of resistance. But this is one that we've recently broken out of. So I'm going to switch the time frame and I'm going to go down to the daily to get a closer look at what's going on here. So you'll see that this down sloping level of resistance that was holding us down for since the peak of the bull market back in 2001. So yeah, several years, this served as a resistance. We recently broke out of it, which is a good sign. But for the last year or so, we've just been in this like channel, which has been okay because it's given us very predictable price action. So when the price comes up here, you look to a short, a long down here, a short, long. It's just been bouncing in this range for a very long time. And, the last time this price came up to this range, that's where we got the sell-off. Okay, and yeah, so we're still within this broader range, even though we've broken out of this long-term downtrend, but we're still in this channel, okay? But within this channel, we have different levels of support and resistance. So this was a level of resistance, which we've broken out of. We broke out of it. We came to the next level of resistance, which was just up here. So the levels on this, this was a range. So I had this marked at around 664 up to 669. And then this range here I have marked from kind of like the top of these 2 candle bodies up to this candle body range here. And that is 723 up to 728. So you see basically it acts as resistance here, we break out of it, we retested a support, then we came back up to this resistance, came back down and tested a support. Ultimately, we broke out, and where we left off in the last video, I'll switch the time frame again, we were coming down right here. So we broke out, and I made a video basically showing that, okay, we're forming a bull flag, bullish pattern, but unfortunately that broke down. And then I made a follow-up video at around here, and I suggested, watch for this previous level of resistance to serve as a support level, and that's exactly what happened. So yeah, we bounced off that, and then we came up, but fortunately we made a lower high, and now we just made a higher low. So we're putting in this kind of triangle pattern right here. overall, it's a bullish chart formation, but yeah, we're just in this range right now. So for example, if the price comes up to the top of this downsloping level of resistance, maybe you want to enter a short. And if it comes down here, maybe you want to enter a long. But keep in mind that, as these two lines, the support line and the resistance line converge, the tradable range is going to get narrower and narrower, and it becomes maybe not worthwhile to take trades when you're kind of in this tight range because you're nearing a breakout point. And typically this pattern will break bullish, right? So if this pattern does break bullish, then you want to look to, the first primary resistance is likely going to be up here. So I'll just mark that out. Just take a horizontal line here. You're probably going to get a little bit of resistance right here, but this is the more significant level that I would look because we had two rejections from it so far. And then obviously if that breaks, then you have this previous high here. And then ultimately, the one that we really want to break out of is this long-term channel formation that we're in, right? You see right here. So what I really want to see is I want to start seeing daily candles close above this line, right? So just draw this line on your chart if you're trading this asset. Daily candles above here will trigger a long for me up to this level right here, this horizontal line around $9.49. So, if, for example, we were able to start closing a daily candle above here, the current level is 866, right? So yeah, from 866 up to the horizontal line 949, that could be a pretty good trade. And then from there, if we're able to close daily candles above this $9 and 50-cent region, then the next level I'm targeting is going to be up around $12.68, and that is going to make for a very good trade. Now, just to give you an example of the probable risk reward ratio that we can get on that setup, if I take a long position, if we're on a daily candle above here, close above here, I could target this range. I marked out the risk reward ratio if we were to take a trade on a daily candle close above this $9.50 range, maybe a little bit higher than that because, we want some bullish price action. So say if we entered at $9.88, we place our stop slightly below this previous level of resistance and just hope that it flips to support. Stop would be around here at around maybe $9.14. And I would target this upper range, this other horizontal trend line that I suggest that you mark out. And that would give me a risk reward ratio of 1 to 3.72, meaning for every $1 I risk, I can potentially gain $3.72 to the upside. And on this trade, this being the daily time frame, I would risk I would risk 7% to potentially get about 26%. So that would be a pretty good trade entry. Now, if you wanted to enter a trade, but you didn't want to risk 7% on that trade, let's go down to the hourly and see if we can find any entries. Yeah, so here we go, guys. We're just in, like I mentioned, we're just in this kind of triangle formation, bullish pattern. But, as these converge, they get, the trading range gets tighter, and I probably wouldn't want to take those trades. If anything, actually, no, sorry, scratch that. I would take trades here, but the trades would be longing this upsloping level of support as opposed to shorting the resistance, just because, we're nearing the breakout point, and yeah, like I said, they typically break to the upside. So a long position, you could, I'll just mark that out and give you an example. Long position, let's say we entered right here, place a stop loss. I would place it just below this level right here, this horizontal level of resistance and support. And let's say if I targeted the top of this triangle, what can we get off this? Risk reward ratio 1 to 1.3, not really ideal. If you really wanted to go for it, what you can do, you can enter this. You're not really risking that much. You're risking 2.91%. And as the price kind of moves up, you can just trail your stop loss. You can manually just click and drag your stop loss higher. So you could be in a situation where once you move your stop loss up to break even, you have a no risk trade. And in that case, I would just kind of take the risk, that the price comes up here, and I would target this upper range, as I previously mentioned, for maybe 6.66%. I don't know what exchange you're using. I put a link to the exchange that I use in the pinned comment and the description. I really like it, and it allows me to do that. Like when I have my stop loss marked, I could just click and drag. It makes it really easy. And that's normally what I do as the price moves up. I like to move my stop loss up along with it, secure like a no risk position, and then maybe just increase my take profit region to go for a bigger reward. But yeah, that's Chainlink working out according to plan. I mean, it's a shame that we didn't get more of a an upside to this bounce off this level of of support. Sorry, that would have been nice. But it appears we're just kind of like going to drag this out a little bit more. Work within this triangle formation, and then yeah, what I'm really looking forward to is a break of this longer term channel formation right here, guys. So I'll move that out to the daily. As I mentioned, it's right here. We've been in this formation for like over a year now. Basically, right now, I do think the bottom is in for the market. The Bitcoin bottom, I think, is in. I think the altcoins have just kind of they're in bottoming out formations, and they're just kind of in the initial stages of the next swing of the bull market. But normally, if you look at previous cycles, this is just a really boring period, right? So, yeah, don't expect any crazy bullish momentum until the halving, and that's not until maybe April next year, right? So, in the meantime, you're going to have just very tradable ranges, and just try to make the most of it. Sorry, just try to make the most out of it, and just accumulate as much coins as you can by trading well and maybe dollar cost averaging into your positions. And then come late 2024, 2025, I think you'll probably be very happy that you did that. Again, not financial advice, but yeah, that's just how I'm playing it. Anyway, again, if you're not subscribed and you want to get updates in the future, just subscribe now, click the bell, click on all. And yeah, that about wraps it up. Have a good evening. Bye.